the next or even maybe the final frontier, depending on which part of fintech you're in. The next conversation to get your Tuesday morning synapses firing is about exactly that. And we open with a single question, one question. How can e-commerce and retail players leverage embedded finance, a so-called $3.5 trillion opportunity? Yes, I said trillion. I had to check with the team when I read it first, but we meant it. A T, trillion, you get it. All right, it's a pretty sizable opportunity.
Hello, it's great to be here at Money2020 and talk to you all about embedded finance. So exciting to see people in person again. And because I'm so excited, I'm going to ask for a quick show of hands, which I know is cheesy. Who here has ever bought something? It's a lot of hands. Ever bought something online? Ever bought something in a shop? So you are all the customers, which hopefully should be the stars of the show in these three people's lives and also in this panel discussion. So embedded finance, we've all heard the phrase, every company will become a fintech company, but the ability to embed solutions now means that retailers don't have to do that. They can now embed the services of a trusted partner. But who should that partner be, and how should we partner with them? Embedded finance is going to be a huge opportunity for retail, online, offline, and where those two worlds collide. And how do we keep you guys, the customers, the center of it all? If you're a retailer or a customer, how much do you even care about embedded finance? Do you want to know about it? Do you just want things to work? Well, finding out how to make it work, I've got my panelists here today who need no introduction because their names are all there. So I'm going to kick off by asking Matteo, what are we seeing in embedded finance? Lots of retailers are tapping into it. Where are you now on the buy, build, embed scenario?
Yeah. So Wayfair, we sell furniture. And you might ask, why do we need fintech or embedded finance to sell furniture, to sell chairs, or to sell a couch? I think the angle that we're trying to take is really to understand our customer needs and how to augment that shopping experience, how to make it as good as possible, how to give customers the ability to purchase what they want at the time that they want. And really trying to find that thin balance between what we build ourselves versus what we find the right partners that we can work with. Luckily, we are at a scale with Wayfair where we can have a big enough team that actually can focus on building the right experiences for our customers. But we also believe that fintech and embedded finance is something that requires a certain level of specialization and understanding of the needs of the customers. So really looking at the broad spectrum of partners that can support our needs by providing us the rails to get to the final step of the checkout, and more building the surrounding experience around it. So how do you explain customers what are the right payment options for them? How do you present them? How do you combine multiple options at the same time with a flawless experience? So really that's the angle that we're trying to look for.
Thank you. And Omar, who is this guy, not this guy, this isn't the first time retailers have decided to use financial products. And what's different about embedded finance, or is there anything different about it?
Well, I guess there's two big things. One is I have no idea what we're talking about when we say embedded finance. And I'm on stage and I'm on the panel. And I think, was it FinTech Magazine that did a survey of retailers across Europe? And it was a scary statistic. Something like 39% of senior decision makers at retailers don't know what they're deciding and don't know what we're talking about when we mean embedded finance. So I think that's the first issue. Second issue is ones who have tried it before, because everything old is new again, is that this stuff can be really dangerous. This stuff can be fatal if you try to do it yourself. So if I think, and to Matteo's point, if you're one of the big guys and you've entered into embedded finance yourself, usually because your margins are super thin, you already have thrown away the money on your cost of customer acquisition, you're looking at monetizing your customer base, you're looking at increasing LTV, what will we do? Well, we've got a huge cash flow, we've got a huge balance sheet, well, let's set up a bank. Or let's start offering insurance products. Or let's offer all kinds of crazy stuff in checkout. This stuff tends to implode on you. And what we've seen over the last decade, I think, is a lot, particularly grocery and basic retail department store exit out. I don't know if Dave Birch is here, but I think he was mentioning he's got a Waitrose, a department store card for the last 2.5 decades, and they do nothing with it. So I think challenge number one is, what do we mean by embedded finance? And I think it's something beyond what's been done traditionally, and it's not doing it yourself. And number two, it's not just about taking financial products and chucking them into checkout or making it part of your offer, but it's things that are touching, I think, what Matt Harris was talking about at Bain Cap Ventures, moving beyond embedding financial services towards banking as a service, and then over time, really centering around the identity, which is where I think retailers actually have a right to play and a right to win. But I'd like to talk about that more later.
Sure. And Roland, you know, we hear the statistic that 22% of retailers have embedded finance so far, or done embedded finance. Do you think that's a good success rate? And do they understand what embedded finance actually means? Is that part of the problem?
You know, I think I would agree with what my colleagues said, that on the one hand, I think many people don't understand it really yet. And those that do understand, I think, get a real interest about deepening the relationship that might just initially focus around a payout solution. And I think particularly in COVID, we have learned that you have to have an online strategy. And even those that have been neglecting that idea for the longest time ever now actually do, you know, get friendly with the thought, yeah, you know, there is a community, and particularly among the younger ones, and they are growing, and they are probably the buying power of the next 10, 20 years. So we need a solution. And you know, that's why if you look around here in the forum, everybody is catering for that type of solution. And you know, from a Solarisbank perspective, of course, you know, it's not only about a payout solution, it's about the full data collection around financial solutions. You don't have to worry about the regulatory stuff. Others take that heavy lifting, and so we take a lot of that pain away, and you can focus on your ecosystem and the differentiation. And it's not about the commodity, account, card transaction, possible credit, possible security, possible digital asset. Those are all commodities. The value creation is in the ecosystem where you generate a lot of interest and data, and you use that then to the benefit of the customer, the provider, and all its suppliers.
And what's the biggest problem you face, you know, in supplying this kind of solution? What do customers or clients or potential clients not understand fully? What's kind of the sticking point at the minute?
I would say there is really no problem. I think the momentum that we see in the market is phenomenal. You know, what started, I mean, 5, 6 years ago when I was raising money, and you said, oh, you know, we're Solaris, we're multi-product, multi-country provider of banking as a service. You got questions like, well, what is banking as a service? And you're not a one-trick pony. You have more than one product. Actually, why would you do that? And, you know, today, obviously, everybody understands it because there's a big benefit when you look at the tech implementation, and then you can move from a KYC onto an account, to a card, to a credit, with one technical solution. So what's interesting today is, though, 5, 6 years ago, it was more the disruptive innovators that were interested in such solutions, and today you have the big brands. And that, you know, on the payment side, on the e-commerce side, we have seen it for 10, 15 years, but now it's really deepening in other verticals, and a tremendous momentum of those that, you know, will be the revenue source 5, 10 years from now.
Do you mind if I jump in on top?
Yeah,
So I think there is so I agree, but no, I don't agree, actually. So I think there's a huge problem with the take-up of a lot of these services, and I think banking as a service definitely helps the adoption, but I still think there's a mindset and there's a focus issue, with all due respect, so please tell me if you think I'm wrong. And let me know if I'm going off script.
There is no script, it's fine.
Even better. Most e-commerce businesses, at least that we talk to, are focused primarily on the core of their business. And I'm getting older now, right? So the gray's definitely settling in. So I'm a bit of an old school Porter guy. So besides focusing on your core competencies and the generic strategies, if I'm a retailer, I'm worried about procuring the right products, making sure my supply chain works, and getting it out the door, so the front end of my business. I have no idea how any of this stuff works. And so there's a huge pain point in terms of mindset, in terms of understanding how financial products either hurt my checkout, help or hurt with loyalty, retention, lifetime value. And I just need, I think, in most cases, I need help and I need partners to help me figure that out. Because if I try to do it myself, the danger, if I get a little bit communist philosophical, is the benefits accrue to the biggest. Meaning it's only the biggest retailers, the biggest e-com platforms that can afford to have a dedicated team worry about this. But if I'm a mid-market player, I don't have a hope in hell. I've got to focus on my core business. So all this embedded finance stuff, it feels a bit voodoo and off to the side. I don't know how it fits.
And I definitely think like the journey that we took at Wayfair, it's something that took us a few years to get to a point where we have a good understanding of what the needs of our customers are and how we can fulfill them with a specific set of payment methods, loyalty mechanism, and all of that. And as I said, it is embedded finance. You could look at it as a marketing and retention tool as well, something that helps a merchant to augment the shopping experience for the customers. But it's hard to see a lot of merchants to really understand the value and more just looking at it as a cost, like how much is it going to cost me to offer a financing option or a loyalty plan, while instead should be looking at it as the incrementality that you drive from a business perspective, but also the value that brings to a user. And that starts already from earlier, even outside of the website or the apps. Like you can use embedded finance and the services that you provide as a way to get more users to be interested in what you're selling.
I think that's a really great point, and that's where it comes beyond, okay, we partner with PayPal and we do payments or whatever, to actually an embedded solution, which hopefully we'll move towards. Roland, coming back to you, we talk about payments tends to be the first area of innovation we talk about in fintech, and then we try and apply that to other areas. What do you think over the next year are some of the key potential for embedded finance solutions, more than just making it easier to pay for stuff at the checkout?
You know, let me give you an example, and I think it kind of helps a little bit to understand why probably some of the traditional strategies are just not reaching far enough, and they have failed then in the next phase of implementation. I was recently in a conversation with an airline CEO and his chief innovation officer, and you know, basically introduction via the network, which all of us have these days. And he kind of said, oh, so Roland, you know, let's talk about how we can add Solaris into our airline checkout. And I was like, I have zero interest in being the 10th option when it comes to payment of a flight to offer, you know, whatever type of solution. That's not what I'm talking about. I'd be interested discussing with you how you can basically implement an ecosystem around financial solutions in your wider community. And the chief innovation officer, he immediately jumped in and said, oh, so you basically want to help us make a cost center to a profit center. And I said, exactly, you understood it. We want to use the ecosystem not for a payout solution which is costing you money. We want to use it, the data that we generate, that we have interaction that goes far beyond the payment solution. It could be, of course, you start with a loyalty scheme. You could have a credit solution with it. You can all sorts of, you know, securities or digital asset solutions adding to that. They will increase interaction and make, you know, the client as part of the ecosystem to a you know, not a paying but a user. Mm-hmm. And I think that's a good example how the payment will evolve to a much more comprehensive solution.
Yeah. And that kind of brings us to talk a bit about all the data involved in this, I suppose. Omar, you made a point about having Waitrose card for two and a half decades and things like that. That's a lot of data on what a customer's buying, but are we using that properly yet? And what does embedded finance mean for that?
Well, I think the answer for most of us is a pretty emphatic no. And it perplexes me, and I'm guessing most of the people in the audience would also be a bit surprised, terrified on one side, but also surprised, terrified that how much of our lives, our shopping habits, our personal preferences are known either to the networks, payment companies, banking as a service providers, retailers, but at the same time, how little of it's actually used to generate value. So for example, I've been shopping on an unnamed global bookstore for, geez, at least since I was 10 years old. So, you know, from whenever they started, way back when I was living in the States. And like the book recommendations still basically suck. And that's just, I bought this 10 years ago, and here's another one. And more to what Matteo was talking about, I think if you look at it from an end-to-end business process perspective and you go, look, there's a number of key flows I have in my business. I want to take a shopper through the shopper journey and then complete the loyalty loop. There's at least 10 touch points, ideally fewer. How do I use data at every point? Like, why did I click and land on this landing page? What discovery process did I go through? What other sofas or mattresses did I look like before adding it to my checkout? What payment preference did I use in my checkout, and why would I return? Like, even that isn't used. And I think in most businesses, none of that data is joined up. They're in different CRM systems. Then if we're talking about true embedded finance and true banking as a service, getting my procure-to-pay processes to line up with that. So how do I get that to feed my inventory management processes? None of that's joined up. And I think it goes back to this mindset, which is if I'm a retailer, I'm obsessed with selling stuff and getting stuff to sell, and everything else is an adjacency, and I just don't have those people unless I'm one of the biggest. So no, data is a complete mystery for most people, and it's surprising to me that it's in 2022 we're not making a better job of it.
It doesn't, from a consumer perspective, it doesn't surprise me in this world of Alexa's listening to you. If she is listening to me, why am I still being suggested nappies when my conversations suggest I'm nowhere near ready to go down that path? Either I'm not old enough to require nappies myself, or I'm not old enough to.
Well, funny story, my daughter's now 15, and I still get recommended diapers and little stroll. It's ridiculous.
Exactly.
Anyway.
I mean, one thing with it is also, like, especially if we talk about embedded finances, the security and regulatory aspects around it, where you need to take care of the data in a secure way. So really finding the right solutions to do that, it's important. And it is, at the end, one of the cornerstones of a good financial ecosystem that you build within your applications. Like, being able to recommend the right products also from a financial point of view. You could do it in a much better way, but it's often something where you need to put some guardrails for good reasons.
Oh, that's definitely true.
I think that brings us on to a really interesting point around what if something goes wrong, right? So if you're, for example, if Wayfair embeds a financial services solution and I'm the customer and something bad happens or it doesn't work, I just associate that with your brand. So does that impact how you do things and who you want to partner with, and do you have to be really careful around that?
So the branding experience is something that we really care about also when offering our embedded finance solutions. Good example is what we've been doing in the US. Like, we've been building what we call Wayfair financing. It's basically an aggregator of point-of-sale solutions. We believe that we want and need to work with multiple lenders, multiple providers to cover a breadth of options and customer preferences. But we also think that it's really key to maintain that consistent journey for the customer, a user experience that they're familiar with. But you want the customer to know who they are contracting with, ultimately. So if you work with a specific credit lender, that is something that you will want to surface to the customer. So that's definitely an angle. And then there is the trust that some companies bring to the market. Like, PayPal is a good example. Like, they've been spending 20 years building a brand that customers love and care about, especially a good example is in Germany. Like, if you don't offer PayPal in Germany, customers will not shop on your website. Yeah. So really finding the thin balance between your own corporate identity, but also the trust that a given financial institution brings to the table.
Roland, is there a right amount of friction to have there, do you think? And what does the branding look like from your side?
I think, Olivia, it's actually the other way around. If you have a strong brand and you're concerned about your brand, and pretty much every company is, then I think the risk of the association with a third-party provider that is very prominent is probably one that the stronger your own brand is and the more concerned you are about it, the less you're willing to engage with that. And I would strongly argue those value propositions that are a mix between B2C and B2B are actually an accelerator of that risk, because you don't know if you're B2B, included in the ecosystem of a strong brand, if that retail brand that also is there is doing all sorts of different things, that might have a negative impact. I mean, you know, you can go back 10, 20 years when you had reference points when it came to a financial solution where it says, click on this button, and you ended up in the completely different financial website of a financing solution, and you were outside of the ecosystem. That was uncontrollable. Today, when we talk about, you know, the use of the APIs and the integration, I mean, we discuss hours and days how the best customer journey will work and the least disturbance of that journey when you include a financial solution. So the risk of a negative customer experience increases with the tech affinity of your provider. And that's, you know, why you should focus on somebody that specializes in that, that's good in doing all the reg stuff, and obviously has additional products and services that you can add seamlessly equally. I mean, just a simple example. If you use KYC and you use the KYC of one specific provider and you want to have a second provider, that KYC might not be good enough. So suddenly, you know, your customer using the same solution gets confronted with, oh, I have to do another identification. Why? Don't understand it. So you really need to think strategically about, you know, what is it that you want to achieve, and then you need to choose a partner that allows you a seamless embedded integration with as less friction and possibility for negative influence.
And Omar, did you have something to add there? You were nodding away, or do you want to?
Lots to add. I guess the two parts of it. One is the brand is both a big attractor, but also a big risk. And what I mean by that is a bit picking up on what Roland said and sitting, I think, literally in between Matteo and Roland. If we think about businesses that have been really successful in driving consumers to adopt, Klarna is a great example of driving enormous consumer adoption with a relatively simple proposition, albeit at enormous credit risk. It then creates a danger as you begin to monetize that consumer base with other people who put as much relevance into their brands. Big global shoe companies and whatnot. And whose brand are you most attracted to? It's probably less of a brand issue fundamentally as it is an ecosystem issue, a bit as Roland was articulating, because if I think about other kinds of places where you can embed finance, I think it's less about Ms. Strange's thesis that every company is going to become a fintech. Because again, finance, financial services, credit risk, AML, KYC are highly regulated, massively fragmented, incredibly expensive and hard to do, and fatal if you get it wrong. I'm unfortunately part of the Apple ecosystem, and having lived in Canada and the US and now in the UK and now in Denmark, you can imagine I've got every Apple iTunes account in every country, and I can still only use Apple Cash in the US years after launch. And I think our friends at Goldman Sachs are still backing that. And then yesterday's announcement of, you know, the Apple, what is it, Apple Pay now, buy later or whatever, that's going to take years to roll out. So I think what you'll see happen is as these different players who are trying to embed or integrate payments, financing, back-end services, loyalty, insurance services into their solutions, these things, particularly if you're cross-border, particularly if you have different customer segments, take years and is incredibly costly. I just don't see it happening without partnerships.
In open banking is another prime example of where branding is still something that we need to figure out collectively at an industry level. It's like, do customers care about a branded experience? Do they want to have something that is more integrated within the merchant ecosystem? From the feedback that we got, it's still a little bit uncertain. Customers need to understand what open banking gives you, but that embedded aspect is still something that requires some trust building. So adding that element on top definitely adds some value from the user perspective.
Definitely, and I think the only other thing with open banking, whether it's about initiating the payment or getting access to accounts, by way of history, I'm a bit of a nerd and then a payments nerd. And there's a great webcomic called XKCD, and there's a famous XKCD comic, and it's literally XKCD, for those of you who are less nerdy. And it was about standards. So the first panel of the comic is there are 15 standards for USB connectors. Panel 2, there's too many standards, we have to simplify. Fast forward 10 years, there's now a 16th standard. So things like PSD2 and open banking are absolutely a force for good. They will enable new services, they will accelerate, but it adds enormous complexity because it becomes the 10th option you have to offer in the checkout to an airline. So I'm still stuck on my thesis that it's the retailers, the merchants, the businesses who have the biggest balance sheets, but the thinnest margins who are going to drive the most innovation here because they have to. They have to find profits somewhere.
Yeah. And I think it's interesting what you mentioned there about too many standards and almost too many cooks in fintech sometimes. And we've gone through unbundling all these services and offering these individual apps that do things to them realizing no one wants to download 20 different apps on their phone, so we're bringing them together again. Roland, what's your view on how will embedded finance enable things to come back together and this kind of rebundling of services, or do you think it will?
I think there's a lot of logical reasons why it makes sense to have one provider for more products. It's driven by the demand. I think you can see it, the e-commerce ecosystem is one that's very developed, but then you see automotive, airline, others that now really are interested in the solution. I mean, we've done a study with one of the big consulting companies in the world, and basically what we see today is the tip of the iceberg. It's banking as a service is a 10 billion euro industry in Europe today, and it will increase to 80 billion by 2030. And that only works if you have across the whole industry an adoption of multi-product solutions. And where does that come from? Of course, it's going to come from the traditional banks, because a consumer doesn't go and get a credit and then he goes shopping. He goes shopping and he wants the credit in the checkout or when dealing in the ecosystem. So it's a big transformation that's driven by the younger populations, but it's eating its way up. And as it does that, of course, it becomes extremely attractive for all of us that are in that industry.
And you talk about different industries, and I think there's certainly some more than others that need to recover over the coming couple of years after what's happened. And I won't mention the airline industry to anyone who's arrived here stressed and sweaty from the last couple of days. But where do you see embedded finance maybe over the next 2 years, say, helping certain retailers to recover but not go back to the way they were before COVID, I suppose? Well,
I think, a seamless integration of any type of financial solution within an ecosystem is always a win-win for everybody involved. It's a no-brainer. But you have to get it right, and you have to think bigger than, I'm going to integrate a payment and that's it, and then I'm not going to use the data. It has to be a holistic solution to your ecosystem. And that's where I think banking as a service can help you. Embedded finance solutions I would say it's a self-fulfilling prophecy.
So I'm probably going to sound like a broken record, but I think the only natural path for embedded finance is increased fragmentation and complexity. One small example is we work with a retailer both in Germany and in Poland. They work with a particular provider in Germany for buy now, pay later, and they work with another provider in Poland for buy now, pay later because of all sorts of regulation, and we help them with both across. And just one simple change in financial regulation, going from the BaFin to the Polish FNK, means that the buy now, pay later experience in Poland is more like apply now, buy maybe, pay never. It's a one-week application process. You don't know what's going to happen. It's like you're back in the 1980s. It's a complete disaster. So I think my advice would be choose your partners carefully, the ones who are going to help you simplify this over time. And I'm just now echoing what Roland said. But actually now I'll steal an idea both, I think, from Matt Harris and from Dave Birch, which is for retailers, really, really recognize what you have, which is you have maybe not a 360 view, but you have at least a 90-degree view of what consumers are doing, what they like, what they want to pay for, and what they come back for. Use that data, and more importantly, use the identity and work with people who can help you turn that 90-degree slice of the identity into a 360 view. Because the best framing I've seen for embedded finance is not an article I read 2 weeks ago, which was embedded finance is about Uber offering card on file. I mean, come on, that's not embedded finance. That's, anyway. Matt, again, going back to BainCap, they've got a really nice framing, which is FinTech 1.0 was analog to digital. FinTech 2.0 was going from products to embedded or integrated financial products. It's the wave of FinTech 3.0 when we move into identity as the core identifier, not plastic cards, not someone else's KYC process, and into decentralized finance. I think that's when we're going to start to see this really, really take off. But that's as an old guy speaking.
Mm-hmm. Matteo, what are you seeing at Wayfair with that?
No, totally aligned, and I think the augmentative aspect of embedded finance is what I would look at from a merchant perspective. It's really like, what kind of products are you going to be offering that give your customers a better experience? And the partners that you end up choosing, it's more of a consequence of that. You start from the customer, you start from their needs, the entire lifetime journey, not just at the end of checkout, when they come back, what kind of choices they make at the individual customer level, as you said. It's different if I'm buying a couch or if I'm buying a set of smaller items for my kitchen. I'm going to use different products. And really understanding that, embedding in the solutions that you're building, it's key. I do see like the need to spend some money to make that investment, but that's also why you look at it not just as a cost center, but as an opportunity to grow and to contribute to the profitability of the business and to the customer experience.
And Matteo, can you give us one kind of key tip around, if you are going to choose a partner and start working with them, what's one thing you can do to make sure that there are as few bumps in the road as possible?
Yeah, so generally also there, similar broken record. Start from what your customers need, then look at what type of options are available on the market and talk with as many potential partners as you can that are also willing and able to work with you, not just to give you one product that is available on the market, on a shelf, but to tailor a little bit that experience. Something that not every merchant and retailer will be able to do, something that with a certain size you're able to influence some decisions, but really having that kind of symbiosis between the merchant ecosystem and the partners that you work with to define solutions that work on both sides that are augmentative.
Certainly. So we've spoken about the potential of embedded finance to transform that customer's experience, hopefully in the future. It's all very much seems a long way off from what you guys have said for something perfect, and there's still that misunderstanding. So Roland, I'm going to come to you first, but I will ask everyone, what is one thing that you want people to take away from this around like myth busting or something that's commonly misunderstood about embedded finance in retail?
I think everybody understands the potential, but let's just look at some numbers. Basically, we've asked consumers if they would be willing to bank with some of the big e-commerce brands, and not surprisingly, Amazon was at the top, and 25% of Amazon users could imagine having their full banking services dealt with by Amazon. Let's think about 1 billion or 530 million Europeans. Half of that, or maybe even more, have an Amazon account. So think about the potential that's behind 25% of 250 million users. It's huge. It could be the biggest bank across Europe. More broadly, we've asked, in general, could you imagine doing your financial services without of the traditional Sparkasse, Raiffeisenbank, Deutsche Bank, HSBC and whatnot? And 61% of the respondents said yes, they could imagine having their account outside of their traditional banks. And we have about 1 billion accounts in Europe. That's 600 million accounts that are up for grab. I would say today we're maybe at 10% of that, maybe 50, 60 million. You look at the Revoluts and the Starlings and the N26s and those that do that via Solaris and whatnot. So it's 10 times of that. And I think that's what you should take away with. I mean, the potential of that is huge.
Potential is definitely there. Omar, can you bust one myth for us in 30 seconds?
In 30 seconds.
Pretty easy, right?
That embedded finance is here. It's not here. The starting gun hasn't fired yet. So I'm a big believer in A, fintech, and whatever we really mean by embedded finance. So finance as a service, decentralized finance, but we're only at the very beginning of this. So choose your experiments wisely.
Great. Finally, Matteo, what do you think people are misunderstanding here?
I think, just to summarize it, like to look at embedded finance as an opportunity, not as a cost center. You said, like working and experimenting, try to understand what works best for your users, but really making it core capabilities for your business and for at the center of your customer experience, where it makes sense. So not go on a road that doesn't lead to anything, but really focusing on your customer needs.
Great. So whether you understand it or not, the goal is the same, to gain and retain customers and keep them as happy as possible. So thank you all for explaining that to us. I really appreciate it. And thanks, everyone, for listening.
Thanks for having us.
Olivia.